Investment property is land or buildings that is held for rentals or capital appreciation. So once we classify a piece of land as investment property, how are we required to measure and account for it in terms of IAS 40? Investment property is required to be initially recognized at cost. For example, Investor Group used its surplus cash to purchase a few houses in Paradise, a very exclusive area, at a total cost of $3 million. The intention is to rent out the houses. So the houses shall be recognized initially at their $3 million cost. We need to consider how to subsequently measure it every year. Paragraph 30 of IAS 40 allows a choice here to either carry the investment property using the cost model or the fair value model. However, the method that is used must be used for all investment properties. The cost model is exactly the same as that considered in IAS 16 for property, plant and equipment, so we will consider the cost model in a separate clip. We will only look at the fair value model here. In year 2, Paradise received a lot of media attention due to the number of drug-related crimes and gang violence. The media coined the term Mafia's Paradise, and the fair value of investors' houses, as determined by an independent valuer, fell from $3 million to $1 million due to the negative publicity. In accounting for this, the houses would need to be reduced by $2 million to get to its fair value of $1 million. It is important to note that the loss would be recognized in profit and loss and not in other comprehensive income. In year 3, the Mafia families reached a compromise and agreed to work together to uplift the community and make Paradise a safe area. This positively affected the value and demand for houses, and the fair value of the properties owned by Investor was estimated by an independent valuer to be $3.5 million. The journal entry would be a gain of $2.5 million to increase the value of the houses from $1 million to its $3.5 million value. So you should note that the gain, just like the loss, would be recognized in profit and loss. To recap, investment property is initially recognized at cost, but in subsequent periods it can be measured either using the fair value model or the cost model. You should now read IAS 40 paragraphs 30 to 35 and then complete the case study and multiple choice questions to make sure you understand this material.